All right, good morning, everybody. Please, can you hear me? Can everybody hear me?
Yes, very clearly, boss.
Yeah, well done. Good afternoon. Good afternoon, Professor. How are you doing, ma?
Yes, we can hear. Thank you. I'm
Well
good.
done.
Thank you.
Well done, ma.
Thank you.
Yeah,
Yes.
so we'll be starting in the next 2 minutes. I quickly want to send out the reminder for the last time for the people that are already not on the call, so that they can join in ASAP so that we can quickly do what we have to do. Also, the meeting is recorded. In case you want to watch it later, the meeting is recorded, and I'm going to be putting the recorded version on YouTube for you to watch and rewatch again. All right. So far so good. Please let me get like a feedback. How many trades have you taken with us, Mrs. Omam? How many trades have you taken with us so far, based on this strategy?
I'm not too sure I can remember, but all of them have turned to profit.
Yeah.
And that's all I can tell you.
Actually, yeah.
I'm laughing now. I'm not even smiling.
Very good. Yeah. So
Thank you
quickly,
so much.
so I believe you know how to do trailing stop already, right? You know how to do trailing stop.
No, I'm not clear because it actually took me out of a trade.
Okay.
This morning, and it was I was in profit. But it took me. I think I set it wrongly, so it was going to be one of the questions I was. I'm glad you actually asked.
Yeah. Well done. Okay. All right. So let me quickly just start from the scratch. All right. So basically, this particular strategy that we are using. This particular strategy that we are using is called HIN strategy. All right. And basically what we do with this strategy is basically to trade during high volatile time. To trade during high volatile time. All right. We trade at maximum volatility time. And if you go to Forex Factory, you see the different news that we have. Core CPI, core PPI, and all that. But we don't trade all of this news. We don't trade all of this news, all right? Remember, we only trade XAU USD. We only trade XAU USD, all right? So it means that all the news that you want to be seeing when you go to Forex Factory is USD related news, which is this one. So you unclick the rest and only leave USD news, all right? So if you look at this, you see that, okay, you're not seeing any other news anymore other than USD. All right. So these are the news that we have for the rest of this month. And you can see they are all high volatile news. High volatile news. They have a red folder over here. All right. So please, can you hear me clearly, or is my background very noisy?
Yes, can hear.
Okay, good. So we have
but I have a question already.
Yes. Please, I think you should jot your questions down.
Why do we trade?
So I can take the questions all together. Does that make sense?
All right. Oh, that's okay.
Yeah, so just jot it down. Thanks. So I'll just take the question once and for all. All right. So USD news, all of this that you are seeing here, we have CPI, we have PPI, we have retail sales, unemployment claim, and all that. But we don't trade all of this news. The ones that we trade, we've been able to backtest them, and we see that it works perfectly with the strategy that we are using. So now, what you do at every point in time is to see the calendar, and you notice at the beginning of the month. This is if you want to be doing it by yourself. Majority of this work, we are going to be doing it for you, all right? So the next news you are going to be trading is on Wednesday, at 1:30 p.m. on Wednesday. You see the time here. That's the time the news is going to be dropping. And this is the news that's going to be dropping. CPI is basically measuring the inflation rate. And you know how important inflation is as a metric to the economic development of a state or a country. If inflation rate is high, it means the country's economy is not doing good enough. All right, but if inflation rate is low, it means the country is doing very well economically. All right. Now, either the inflation rate is high or low, either is affecting the economy positively or negatively. It is really not our business. The business we have here is to make money either way. So if it's a positive news, we make money. If it's a negative news, we make money. And how do we do that? Because we are positioned to make money either way. All right. We are positioned in both directions. When I started trading Forex, a lot of people just forecast where price is going to, but in the real sense, you can't really forecast where price is going to because you don't know what kind of data is going to be dropped. For example, NFP, unless you work in the Bureau of Labor in the United States, you can't really know the data that's going to be dropped as per employment data on a monthly basis. All right. So if you are predicting what will happen before the markets, there's high likelihood that you lose money majority of the time. All right. So we found a way to be able to make money wherever the price goes to. We just position ourselves on both ends. And how do we do that? We do that with the help of what we call pending order. All right. So in the financial market, you can set a pending order like a trap for the price. All right. So let me take, for example, now. The price is currently at 19.15, right? And let's say we are expecting a news to drop, right? We are expecting a news to drop by, what's the time now? Let's say by 12:30, all right? By 12:30. So what do we do? Before the news drop, there's usually like a consolidation. A consolidation is like when price is just ranging, it's neither going up or down. It's just ranging between the zone. All right, so that consolidation, you are waiting for price to break out either up or down. So what do? We position ourselves with the help of buy stop and what we call buy stop and sell stop. So buy stop meaning that if price breaks out, if price is going up, we should pick up our buy order on the way up and we should make profit. If price is going down, we should pick up our order on the way down and also make profit from that transaction. All right. So that's like the basic fundamental rule. Our fundamental strategy that we use here. So we basically position ourselves for buy by using buy stop and also position ourselves for sell for using sell stop. So we are not entering by market execution. What we are doing here is what we call pending order. All right. So your order will not get triggered until price gets to the point where you set it at. And in this case now, the buy is at where? In this case that I'm explaining right now, the buy stop is at 1916. So I won't get into this market until price gets to 1916 for the buy, or I won't enter this market until the price gets to 1914 thereabouts for the sell. All right. So that is the basic ideology behind this thing that we do. And whenever a news drops, there's something that's very, very common. It is volatility. Because the news drives the price to a certain direction. All right. And that's what you want. The higher the volatility in the market, the better, the more profits you are liable to make at that period of time. The more profits you are liable to make. Now, so we talked about, okay, so let me quickly show you how to set the buy stop and the sell stop using this example that I just did. All right. So we are trading gold USD. So you come here and search for gold and US dollar. Can you see gold USD? This is gold USD over here. So what do? You bring that chart, you bring it out like this. You just drag it. Excuse me. Chart window, yes. So once you do that, you can see gold USD over here now. All right, so I'm going to change the template.
I want to get into 10,000 Kenyan money. I think it should be 68.
Please
68 or 69.
Mute your mic if you are not saying anything related to what you're doing here.
I have this app. It is not. They have them that use currency converter.
Please mute your mic, please, Abiodo.
10,000 Kenyan money.
All right. So let's quickly go. All right. So now we are saying we want to set our buy stop at a certain price and want to set our sell stop at a particular price. All right. Now I'll be using just 0.01 for the sake of this analysis. In case any of the other goes to execute. Oh my goodness. Please mute your mic now. Thank you. All right, so I said the buy stop is at where? The buy stop is at 1916, right? The sell stop is at 1914. So I'll be doing that exactly right now. So I'll set the buy stop. So if I want to set the buy stop on laptop, what do? I just come to the symbol here, right? And click new order. So once I click new order, you see market execution, you change it to pending order. That's the first thing you do, change it to pending order. Once you change it to pending order, there are different types of pending order. So which type of pending order do you want to set? I'll say buy stop, right? And the lot size, I have to change it. On default, it's usually on one lot size. So for this purpose now, I'm using 0.01 lot size, all right? Now, what price do I want to set the buy stop at? I'll input it here, 1934. Or 1916, I mean. 1916. Then I will do what? I place. Immediately I place it, you can see the buy stop has already been, been set at this point. This is the order that I just placed now. So I'll do the same thing for the sell stop. I'll go back to the symbol, right click, new order, all right? Then change it from market execution to what? Pending order, and also set the sell stop immediately. Remember, we are the ones that will give you the price for the sell stop, but for the sake of this explanation now, you can just simply just follow what I'm doing. All right, so sell stop, let's say sell stop is at 1912. Sell stop is at 1912 for the purpose of this explanation that I'm doing. So right now, I've been able to set both the buy stop and the sell stop. I've been able to set, if you can see it on this left side, you can see the buy stop up and the left sell stop down. So price is in between those two things. None of them has gotten executed yet. So what is the next thing I'm going to be doing? The next thing I'm going to be doing is to set a trailing stop. A trailing stop. Esther. Let me call her. Yeah, so the next thing to do is to set a trailing stop. Now, if you set a trailing stop now, what is the purpose of that trailing stop? There are two major purposes of the trailing stop. The first purpose is for it to help you maximize your profits. It's for the trailing stop to help you maximize your profit. The second purpose of a trailing stop is to help you minimize your loss in case when the market does not go the exact way you want it to go. First thing is to help you maximize your profit and help you minimize your loss. So a trailing stop is like a combination of take profit and stop loss at the same time. All right, it's like you are setting take profit and stop loss at the same time. This is what I mean. Now, as you are in this trade now, you know the order has not gotten triggered yet, right? So what we will do is to set a trailing stop for both orders. So we are doing the buy stop first, and you just right click it like this. You see trailing stop here, then you edit it. We usually use like 200 points, which is like equivalent to 20 pips. 20 pips trailing stop. So we've already set for the buy stop. Now we are setting for the sell stop as well. Trailing stop, customize to 200 points. I'll explain all of this now. Now, what is the purpose of this trailing stop? When this trade start moving into our direction now, let's say the buy gets triggered and the trade start moving up. All right. What you are saying is that once the trade gets into 20 pips profits, it should lock that profit for you. What do I mean? Because there are sometimes when a trade will go into massive profit, then it will come all the way down again to take away all the profit that you've already made from that trade. That way, you've not made anything out of it. You've just done let's say excursion. You know, you follow the market up and you still follow it down. And sometimes you even end up losing more money than you made from that trade, than the floating loss. That's why they call it floating loss. You've not actually really made the money in a trade until you've secured your profit, until you've closed the trade. I've not made any loss from a particular trade until you close it in loss. All right, so that's why we have a concept of floating loss and floating profits. It's still floating. It means you've not realized the profits yet and you've not realized the loss yet. All right, as long as you are still in a trade, it is a floating loss or a floating profit. Now, why we are using trailing stop now is because we want to secure some of those profits. We want to secure it, meaning that we want to, no matter what happens in the markets, we want to come out of the markets with some profits. So let's not assume that as the price is going down now, it got to 1912, it triggered the order that we have in 1912, then it kept on going all the way down. By the time the trade gets to 1910, it means the trade has already become a risk-free trade. If you put a 20 pips trailing stop, which is equivalent to 200 points, it means once the trade moves by 20 pips, the trailing stop gets triggered. And as the trade is moving towards the direction that you want, in this case, as it is selling, the order will keep on moving, will keep on following it. The trailing stop order will keep on following it. So it's like we are setting stop loss. You know, when we set a stop loss, it's like a static order. All right, stop loss is usually like at a particular point. So let's say we want to risk $5 on this particular trade now. We will set stop loss of 50 pips because of the lot size we are using. We set stop loss of 50 pips, all right? But that stop loss will still be on that same spot. All right, that stop loss will still be on that same spot, no matter what happens in the market. All right, that stop loss will be on that same spot. You can also set a take profit. That take profit will still be at that same spot, wherever you set it at. But trailing stop now it will keep on changing as price keep on moving. As price keep on moving. So let me give you a typical example of what I'm saying. So now our order is at around this point, right? Now, once the buy stop gets triggered at this point and it starts moving down, what will happen? What will happen is that the trailing stop will start following the order, meaning that it will start following it, just leaving a 20 pips breathing space for the trade. So at any point in time, wherever the price gets to, and it moves back or it reverses by 20 pips, what happens? They lock us out of the markets immediately. Wherever the price gets to, and this thing moves back, it reverses by 20 pips or the number of breathing space that will give the trade, they will lock us out of the markets immediately. It means it will secure the profit for us at whatever price the market gets to at that point. So for example, let's say the trade that we currently have running.
I will not be.
Please mute your mic, everybody, please. Thank you. All right, so let's say the trade that we currently have running now start moving into profits. And remember, we are leaving a 20 pips breathing space for the trade. Meaning that when the trade is at 40 pips profit, the trailing stop will be where? The trailing stop will be at 20 pips because it will be following it, leaving just 20 pips breathing space from the current price to the trailing stop. Please, does everybody understand what I'm saying? Does everybody understand what I'm saying? Is there any question so far? Hello? All right, Abiodun said she understand. Please, if you understand, please let me know. So I'm sure I'm not just talking to myself. I understand. Esther said she understands. So as the trade is moving in profit, the trailing stop also keep on securing more profit for us. It keeps on securing more profit for us. Now, this is the logical part now. That trailing stop is still meant to get it eventually. But you want to make sure that wherever it is getting, the trailing stop is getting it, you've secured enough profit. Now, a typical example was the trade I took on last week Tuesday, no, last week Wednesday. All right, we traded ISM service last week Wednesday. Now, the original trade I took the original trade I took gave me like it gave me like 40 pips in profits. All right. I took 40 pips. Then I took another entry, which I had a trailing stop on. And that trailing stop gave me additional 60 pips profit. 60 pips profit. Why? Because the trade was moving in one direction. Actually, the trade moved to up to 81 pips profit thereabout. Then it got to a point that it reversed by 21 pips. Then it stopped me out at 60 pips profit. Then I was able to close out of that trade at 60 pips profit. You know, and it happens sometimes when a news drops. It gives us up to 300 pips, 400 pips. But if you've closed prematurely, you won't be able to make all of those money. All right, you won't be able to make all of those money if you close the trade prematurely. But if you keep on trailing the trade, and you know, trailing stop is automatic. All you have to do is just to set it there. Automatically, it will be triggered. Automatically, it will be securing the profit for you. So rather than moving your stop loss into profits, all you have to do is just set trailing stop and to get the job done for you. It will automatically get the job done for you. All right. So I believe with the help of this trailing stop thing, it will help us not to just secure more profits, maximize profit, but also help us minimize potential loss on our trades. So we are going to be having questions now. Please ask your question. If there's anything that's not clear to you, please ask your question now so that we can call it a day and all that. Questions. All right, Omar, please unmute yourself.
Thank you.
Yes, sir.
Well done.
Yes, sir.
The question I wanted to ask originally, I've actually got three. Okay. As if I have the time to do it.
All right.
Why do we trade for high impact news? Why do we trade gold only?
Only gold, right? Very, very good question.
Please.
All right. So one of the reasons why we trade only gold for high impact news, personally, there are people that trade other currencies for high impact news. All right. But personally, I only trade gold. And one of the reasons why I only trade gold is because number one, gold is a very, very volatile trade. It's a very, very volatile news. All right. So for example, let's go back to the charts and see why gold is actually the most would I call it logical thing to trade? Now, let me see. Now, this was the trade we took last week Wednesday, that I was talking to you about. It did a total of how many pips here? I want to measure it. Now compare it with an average currency. All right. It did a total of 88 pips profit. That trade. Now let's go and check a pair like USD JPY for that particular period. JPY Wednesday. Wednesday last week. When was Wednesday? Okay, this is Wednesday. How many pips is this? Can you see that? This is just 52 pips. The same news, but different movements on these different pairs. Do you understand? So the same news happened, the same effects happened in the markets, but it affected all of these currencies differently. All right. And from experience, we've been able to see that gold moves faster than any other thing, any other currency pair. In fact, there are other pairs that move faster than gold, like US 100, US 30, and the likes of them, all of those indices. Oil, they move faster than gold. But they move faster than gold does not mean they necessarily work with the strategy we are using here. Does that make sense? And another reason why we only trade gold is because of weak. All right, because when you are trading a currency against another currency, it means that both currencies can be strong at the same time. Both currencies can be weak at the same time. For example, when a news drops about gold being strong, it may be that particular time that the currency you are pairing USD with, that currency is also weak. All right, so it means weak, there will be like an imbalance. Do you understand? There will be like an imbalance, and the markets will not really move towards a specific direction. But when you are trading USD against a particular commodity like gold, gold does not have the volume of its own. Gold is like a mirror, all right? So whatever you are trading it with is what gives it the volatility. Gold does not have the volatility of its own. Whatever you are trading with, whatever you are trading it with, whatever you are pairing it with is what gives it the volatility. All right. So it's not only gold USD you can trade. You can trade gold AUD, you can trade gold NZD, you can trade gold CHF, gold GBP, gold Euro. All right, and the likes of them. But majority of all of this news for those other currencies don't move as fast. They don't have as much volume as the US dollar. So that's why we only focus on gold US dollar. Do you understand that, man?
Yes. Okay. Thank you very much.
Good. You're welcome. All right, so
do I have chance for another one?
Yes. Go ahead.
Please, I'm still confused on how to determine where to put the buy stop and the sell stop. I know you tried to explain this before, but I still get a bit confused.
Okay, so
the last one.
Okay.
The last one is the sort of advice you can give on the amount of pips. I know we usually use 200 points,
200 points,
like
yes.
20 pips.
Yes.
For high impact news.
Yeah.
Can that be a standard to use for others? Because I think that was why the trade took me out this morning.
Yes.
I only used 30 points.
You use 30?
Yes.
30 is small now. 30 is
I didn't understand it. It's 3 pips. Exactly.
30 is like 3 pips. Exactly. So for 30, it means if the trade moves back by just 3 steps, it should take you out.
And straight away, it just took me out.
Yeah. So 30 is like very, very small. At maybe 100, okay. Between 100 to 200 is still very, very minimal and advisable. Okay. Then what was that other question? How to set
the other question I was saying, I do know, yes.
Where to set it, how to set it.
Where are the points to use?
How do
you determine?
How do we determine? Okay. I think I understand that now. So one of the major determinants is what we call the minor support and minor resistance points. All right, minor support and minor resistance points. So for example, if we have this particular trade now, so for this particular one, that order that I just deleted, it would have gotten triggered by now. All right, it would have gotten triggered by now. So let's say you have a point like this in the market. We have a point like this in the market. Can I see that? You see, this is like a consolidation zone, right? The market is between these 2 points. It's neither moving up or down. Now, you want to make sure that you set trap at the upper side and the lower side. So this is the minor resistance and this is the minor support. And we usually set the buy stop above the minor resistance and the sell stop below the minor support. Even though all of these things are, even if you don't know it, it doesn't mean you won't make money from what we are doing here. Because most times we are the ones that set we are the ones that determine where to set the buy stop and where to set the sell stop. We just drop the price on the group. All right. But for the sake of people that want to know how to do it by themselves, you should also know. So always look out for consolidation zones like this. And you put the buy stop above the resistance, put the sell stop below the support level. Then whichever one gets triggered, you delete the second one, then you keep on watching the rest. We have 9 minutes left on the call. So if you have more questions. Yeah, do you understand it now? So you just find the key level.
Very well.
Yeah, you find the consolidation zone, then you put your buy stop at the top of the consolidation zone, then the stop loss below the consolidation zone. Mr. Dapsman, please, do you have a question?
No, my leader, I'm still a novice, so I'm just trying to put everything together just so that I'm on track, okay?
But is it clear?
So for now,
so far so good?
I'm good. Yeah, yes.
So when I give you a particular order now, you know how to go execute it and set the necessary things.
Yes, if I get stuck, I know I have my boss because I was actually on the road when you started. So I got to the office a few minutes ago.
Okay. No wala. Then the video is recorded, so you can also.
Okay.
I will put it on my YouTube so you can watch and rewatch, till you get it.
Okay.
All right. So for the last time, let me quickly run through. Yeah, you are welcome. Let me quickly run through how to set the buy stop and sell stop once again. All right. So typically we usually set buy stop and sell stop from the group. All right. So we'll send the order on the group. So let's say we want to set buy stop now. You go to gold US dollar. Make sure it's gold US dollar you are going to, because there are a lot of things that looks like gold US dollar. This one, XAG, is silver, not gold, but gold is XAU USD.
I made that error the last one we did.
Oh, good.
I'm telling you. So I'm glad you said that. Yes.
It happens. XAU USD. All right. So someone is asking a question. I see that you were able to set trailing stop before the trade triggered, but reverse is the case with me. I'm unable to set trailing stop when my trade has not triggered. You can set trailing stop whenever, either when the trade has triggered or not. You can actually set your trailing stop. It may be network issue. I don't know. But you should be able to set your trailing stop anytime, actually. Yeah. So as we were saying, so I'm trying to tell you how to set the buy stop and sell stop once again so that you get used to it. All right. So you right click on gold USD, you click on new order. Once you click on new order, you change it from market execution to pending order. Then you change it to buy stop or maybe sell stop you are trying to set. All right. So the current price is 19.12. So let's set the buy stop at 19.15. Buy stop at 19.15. Then what do? You check the lot size over here. It's currently 0.01. So I'm using 0.01 for this example. So immediately you click place, it places already. All right. Then you do what? You go to trailing stop, then you put it at 200 points. 200 points. Then once you do that, it has already triggered. Then once the trade start moving into a particular direction and it does at least 20 pips in profit, the trailing stop gets triggered at that point. Then you begin to make profit. All right. So let's do the same thing for the sell stop. New order, change it from market execution to pending order. All of this does not take more than 10 seconds. All right. Change it to sell stop. Then put the price here, 19, let's say 19.10, last 19.10. Then you place. Immediately you place, you also do what? You set the trailing stop immediately. All right. You set the trailing stop immediately at 200 points. Then you are good to go. That's all you have to do to make some very, very good money with all of this news that we've been trading. All right. Please, if you have any question, kindly ask your question now. Before we call it a day. I'll only be entertaining one more question. Then we can call it a day. One more question, everyone. One more question. We have 5 minutes left on the call. 5 minutes more on the call. If you have any question, kindly go ahead and ask your question. And if you can't ask it here, it means you have to ask it on the group, and I'll be on set to also attend to you on the group. We are expecting a very, very massive news tomorrow. CPI, historically CPI has given me more money than any other news, So I'm expecting to, make some good figure tomorrow from CPI, and I expect every other person to also make some good figure alongside us. Thank you very much for tuning in today, and cheers, and see you on the group. Bye, everyone.
Thank you so much.
Yeah, bye.
Bye.